Why is Bitcoin dropping today when the RSI is this oversold? The answer lies in the $3.4 billion spot ETF outflow streak, which is now the longest on record, and yet the flows are showing signs of exhaustion. This Bitcoin support and resistance level zone is where the next violent move will be born. If you're searching for a Bitcoin breakout prediction or a reliable Bitcoin price freefall forecast, the levels I'm about to share have been the backbone of institutional positioning all week. Right now, Bitcoin just printed a daily RSI of 20. That's extreme, historic oversold territory. But every single time frame, the 1 hour, the 5 hour, the daily, the weekly, the monthly, is screaming strong sell. This is not a dip to buy blindly. This is a textbook trap where early bottom catchers get obliterated. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end, because I'm giving you 3 exact levels you can trade tomorrow, with precise entries, stops, and risk-reward ratios that put the odds back in your favor. Let's get the instant market verdict. The session bias is bearish, but it is immature, late-stage bearish. We are fading any bounce that does not reclaim a specific level. The herd is positioned overwhelmingly short. The funding rate just flipped deeply negative, and the liquidation map shows a mountain of stop losses resting just below 64,800. That is the danger zone. At the same time, the very oversold RSI is baiting retail longs, and they are getting liquidated candle by candle. Write this number down right now. This is your structural reset button. If Bitcoin closes a daily candle above $70,024, the entire bearish structure resets, and we flip to neutral. Until that happens, every rally is a shorting opportunity on lower timeframes. The herd is convinced we are going straight to 59,000, and that consensus is exactly what creates the violent snapbacks. Know where the herd is, and understand that the market loves to hunt those stops. Now let's dive into the charts from the top down, because the alignment across timeframes is remarkably clean. On the weekly chart, Bitcoin is below every major moving average we track. The 20-week MA is at 73,953, the 60-week MA is near 75,000, and the 200-week is way up at 81,089, acting like a distant ceiling. The weekly MACD is deep in negative territory, with the signal line accelerating lower, and there is not a hint of bullish divergence. That tells you momentum on the weekly is still expanding to the downside. This is not a base, this is a trend in full force. The weekly trend is a strong sell, and until we recapture that 73,300 zone as support, the path of least resistance remains lower. Drop down to the daily, and the picture gets even more intense. The daily trend is a strong sell. Price is trading below the 5-day moving average at 69,154, below the 10-day at 71,539, below the 20-day at 73,953, and below the 50-day at 75,053. The 100-day is at 76,102, and the 200-day is at 81,089. This is a bearish alignment cascade. Shorter-term Mars are all sloping down and stacking on top of each other, reinforcing resistance at every step. The daily MACD is printing a reading of minus 2,338, and that number is not flattening, it's still dropping, which means the bearish momentum on the daily is intact. The bull-bear indicator is minus 13,000, confirming massive selling pressure. And here is what most traders miss. Yes, the daily RSI is at 20, an extreme oversold reading that historically precedes bounces. But look at the stochastic. On the 4-hour and daily timeframes, the stochastic is actually reading 89. That is overbought. In a strong downtrend, an overbought stochastic combined with an oversold RSI is not a reversal signal, it's a bearish continuation signal. It means the tiny pops are immediately getting sold into, and the momentum reloads for another leg lower. The hidden divergence is that price makes a lower low, but the stochastic spikes overbought while the RSI is depressed. That's a trap for early longs. Now let's map the exact support and resistance levels. On the resistance side, the immediate wall is the $70,024 level, which aligns with psychological round number and prior structure. Above that, 73,300 is the next major supply zone, and 75,219 is the macro pivot that must break to end the downtrend. On the support side, we have 64,829 as the critical near-term demand zone. This is the level that is held multiple times on lower timeframes, but it is getting tested repeatedly, and each test weakens it. Below that, 62,919 is the next significant support, which is the June swing low. And below that, the big one, 59,634. That is the macro level that would confirm a complete structural breakdown and target the 50,000 region. Now, cross-asset linkage is screaming. Bitcoin is the risk asset shadow, and right now it is moving tick for tick with the S&P 500 futures. Equities are wobbling on liquidity concerns, and Bitcoin is amplifying that move. The correlation with the Nasdaq is running at 90% over the last 10 days. When the dollar index pushes higher, Bitcoin cracks. We are seeing institutional de-risking across the board, but the spot ETF flow data is where it gets really interesting. Over the last 24 hours, the headline screams a $3.4 billion ETF bleed, and that has spooked retail. But the analyst consensus, which I'm leaning into, is that this bleed looks more cyclical than structural. It's end-of-quarter rebalancing, tax loss harvesting, and profit-taking after the first-half rally. In previous cycles, similar outflow streaks marked local bottoms, not the start of a new crash. This doesn't mean we front-run a reversal. It means we stay mechanically short into strength and let the levels decide that my 1 to 2 week directional lean is for continued downside pressure that eventually exhausts into a liquidity grab below 6 to 4,800, followed by a sharp, violent mean reversion rally that fails at resistance. The exact invalidation for this lean is a daily close above 70,024. That would tell me the sellers have lost control and we could see a short squeeze run towards 73,000. But until then, we trade the short side. Here's your next interaction trigger. Do you think Bitcoin hits 59,000 this week? Comment yes or no right now. I'm tracking consensus, and the split is going to be fascinating. Most people skip this section. That's exactly where the money is made. Keep watching. We're about to build 3 precise trade setups: conservative, standard, and high risk, with exact entries, stops, and reward profiles. Strategy 1, the sniper, conservative. This is the setup for those who want high probability and are willing to wait for the market to come to them. The idea is a pullback short at a level that has been proven as resistance. We wait for Bitcoin to rally into the 5-day moving average, which is currently at 69,154. That moving average is sloping down and has capped every bounce for the last week. Our exact trigger is a 1-hour candle close below $69,150 after tagging that zone. We are not trying to catch the exact top. We want confirmation that the rejection is happening. So if price pushes above 69,200, but then closes the 1-hour candle back below 69,150, we enter short. The stop loss goes at $70,100, just above the structural resistance at 70,024. That gives us a cushion. Our first take profit is at $64,830, which is just above that critical support zone to ensure we get filled. The second take profit is at $62,920. The risk reward on this trade is roughly 1 to 3.1. If price closes a 4-hour candle above 70,000, the setup is void. We cancel the order immediately. Let me show you exactly what needs to appear on screen right now. The sniper, conservative, entry, 69,150, 1H close below after tagging MA5, stop loss, 70,100 take profit 1, 64,830 take profit 2, 62. 920 risk, air reward, 1:3.1 are invalidation. Void if 4H candle closes above 70,000. This overlay will sit there, clean and bold, so you can screenshot it. Strategy 1 is the sniper, patient and precise. Strategy 2, the active trader, standard. This is for those who want to play the momentum breakdown with a slightly more aggressive entry but still well-defined risk. The idea is to sell a confirmed breakdown of the 64,829 support level. The trap here is that we often see false breakdowns, so we need confirmation. The entry condition is a 1-hour candle close below $64,800. Not a wick, a close. Once we get that, we enter market short. The stop loss goes at $65,500, which is above the broken support that should now act as resistance and above the recent consolidation high. Take profit 1 is at $62,900, which aligns with the next major demand zone. Take profit 2 is at $59,650, capturing the macro swing low. Once take profit 1 is hit, we move the stop to entry to eliminate risk, and then trail the stop on the remaining position using a 20-period moving average on the hourly chart. That gives the runner room to breathe while locking in a win. The risk-reward is approximately 1 to 2.8. The setup is invalidated if price immediately reverses and reclaims $65,500 on a 4. Hour closed, the active trader, standard, entry, $64,800, 1H close below, stop loss, $65,500 take profit 1, $62,900 take profit 2, $59,650 risk, air reward, 1:2.8 hour invalidation, void if 4H close above 65,500 screenshot that. Now, after strategy 2, here's your next comment mine. Type your Bitcoin range for tomorrow in the comments. Give me a high and a low. Let's see who's aligned with the levels we just laid out. Strategy 3, the aggressor, high risk. This is a counter-trend scalp for those who can lose small and manage risk aggressively. The setup is a long trade at the 64,829 support zone, but only under very specific conditions. This is not a call for a bottom. It's a mean reversion scalp against the extreme oversold RSI and the negative funding rate. The trigger is a bullish divergence on the 15-minute chart, where price makes a lower low but the RSI and MACD both make higher lows, accompanied by a surge in by volume. We enter only on a 15-minute candle close above $64,900 after that divergence prints. The stop loss is incredibly tight at $64,400, just below the recent swing low. The take profit is at $67,000, which is the local resistance and the 10-period moving average on the 4-hour chart. This trade offers a risk-reward of roughly 1 to 4.2, but the probability is much lower. If Bitcoin wicks below 64,400 before entry, the setup is void, don't chase it. This is only for those who can accept a complete loss of the risked amount without flinching. The aggressor, high risk, entry, 64,900, 15M close above after bullish divergence, stop loss, 64,400 take profit 1, 67,000 risk, air reward, 1:4.2 hour invalidation. Void if price trades below 64,400 before entry, that is the high-risk play. Treat it with respect, risk management pulse. Never risk more than 1 to 2% per trade. No positions through high-impact news or FONC minutes. Stops are non-negotiable. This is how you survive to trade the next big move. Let's close the loop. The single most critical level for the next session is 64,829. That support is the line in the sand. A breakdown opens the trapdoor to 62,000 and then 59,000. A hold and a reclaim of 67,500 would start to shift the short-term momentum. Tomorrow's wildcard is the US jobless claims and the correlation with the S&P 500 open. If equities flush, Bitcoin breaks 6 to 4,000. If equities catch a bid, we may see that short squeeze I talked about, but it will be a selling opportunity into resistance. If you want the full breakdown on gold and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.